Well, America has spoken. The votes are tallied and Donald Trump will be the 45th President of the United States of America. In addition, Republicans retain majorities in both the Senate and the House of Representatives. Hi, this is Adam Zuercher from Hixon Zuercher Capital Management with an economic update for November 2016. In this month's video, I'll discuss some of the major headlines that influenced markets in October, as well as our thoughts on the presidential election. I'll give you some insight into what these economic headlines could mean for you as an investor. I want to start this month's conversation with a topic that's on everyone's mind, the presidential election. A sweep scenario was the least expected and potentially most disruptive for the U.S. stock market. Investors have long voiced concerns about uncertainties surrounding Mr. Trump's policy views, specifically those on international trade. So prior to Election Day, the markets reacted to an increasing probability of a Trump presidency with increasing volatility, with the S&P 500 falling lower for 9 consecutive days. This was the longest streak for the U.S. stock market in 36 years. Donald Trump's surprise victory in the presidential race spiraled through financial markets last night and into this morning, sending U.S. stock futures down about 800 points at one point. Asian stocks and European stocks also dropped overnight. However, shortly after the opening bell this morning, U.S. stocks were up, and as I'm recording this around noon on Wednesday, November 9th, the Dow is up over 200 points. So when you look past all of the current volatility and dig deeper into October's economic headlines, you'll see underlying data that is much more positive than the recent volatility and media hype would lead you to believe. In fact, at the same time that the markets were reacting to the election headlines, we also learned two important details that showed that the economy is actually growing: gross domestic product and consumer spending. First, the gross domestic product, or GDP, beat expectations and had its biggest gain in 2 years. This official scorecard for the economy grew at a 2.9% annual clip during the third quarter. That's a huge improvement from the first half of the year when the U.S. grew just barely over 1%. This result means that the economy is not only growing, but growing at a faster pace than the first half of the year, and also faster than most economists had predicted. The second thing we learned was that consumer spending is actually showing growth. From September, it has grown 0.5% to a new all-time high. Personal income grew as well. In other words, people in the U.S. are earning more money and they're spending more money, which is good news for the economy. We can expect incomes to continue to rise as unemployment fell to 4.9%, and now we have a tighter labor market as employers get more competitive and start to increase wages. Now, I'm not saying that everything is perfect in the markets, but I do agree with economist Brian Westbury's description of our current situation as a plow horse economy. You see, unlike a racehorse who is fast and flashy, but can only maintain its speed for so long before breaking down, a plow horse plods along one step after another. The motion is slower and less exciting, but plow horses have stamina and strength that racehorses lack. As we look forward, I expect this plow horse to keep moving along. We will likely continue to see some market volatility in the near term, but even less eventful elections also typically cause volatility, because the markets, they simply don't like uncertainty. Now, the economy that Donald Trump will inherit is healthy. We might not have a completely smooth ride ahead, but I believe we are still heading in the right direction. If you have cash on the headlines, it's our view that it's a great time to get invested. Keep in mind that our government has a system of checks and balances that tends to mute the impact of campaign promises. Focus on building your portfolio, not a Trump portfolio, meaning that you should build your portfolio around your own goals and financial needs, not speculation on the policies of our next president. I know that headlines and media hype can be confusing, but as always, we are here to keep you informed and share the information you need to have a clear view of where we stand. That's it for this month's update. Once again, this is Adam Zuercher with Hixon Zuercher Capital Management. Nothing we talk about today is a recommendation, but if you would like to discuss your personal situation, please give us a call at 419-425-2400. We'd be happy to sit down and talk to you.